Now, I will suggest that you follow, as always in accounting, a systematic approach. So I would start with the cash receipts journal, and I will go one by one through each one and then compare that with the credit column of the bank statement and make the ticks where they correspond. Now, if you find an amount in your cash receipts journal that does not correspond with the credit column in your bank statement, you circle it. So this 9,340 is an example. If we look at our bank statement, there is on the credit side no 9,340. Similarly, once you're done with your cash receipts journal, go through your cash payments journal one by one and tick the ones in the bank statement that correspond. If you don't find an amount in the bank statement, in this case on the debit side, then you will circle it. For example, this 1,250, if we go to our bank statement, we won't find any 1,250 on the debit side. So now once you work systematically through your cash receipts journal and you work through your cash payments journal, then finally all the remaining amounts that's not ticked in your bank statement you can circle, because those are the ones that are not matching. So now let's just focus on all these circles, try to make sense of them. So if we look at our cash receipts journal, if we have a circle there, it means we recorded it, but the bank did not record it on their side. Why would that be? Well, we can see this is towards the end of the month, and it might be that this money was not yet deposited, or that the bank statement was rather drawn up before it reflected this amount. This amount will probably reflect on the bank statement of the next month. So this is what we call an outstanding deposit. Now, since it is not on the bank statement, we will need to add it to what we refer to as the bank reconciliation statement, which in a sense is just our just the bank statement, but we add additional entries to reconcile with our bank account. So here's an example of the bank reconciliation statement that we draw up at the end of the month. So we start with the balance as per the bank statement. Okay, now remember, the balance according to the bank statement is opposite to our balance. So credit balance according to the bank statement is equivalent to a debit side in our books. So therefore, according to this, we have money in the bank. According to the bank, it's a credit balance. So this balance basically reflects all the entries on the bank statement for that month. So now all that we do is we make some supplementary entries, namely those things that we circled in our CRJ and CPJ, we will have to add it on to the bank reconciliation statement since it does not appear on the bank statement. So if we go back to our CRJ, we can see that we have a 9,340. So on our side, we would debit bank because the money in our bank increased due to our sales. Therefore, on the bank side, they should have credited it. They have not yet, so we will add a credit on our equivalent, namely the bank reconciliation statement. So, indeed, we have a credit of 9340, and that is the outstanding deposits. Now if we go to our cash payments journal, we also have some entries that are circled. In other words, we recorded it on our side, but it is not yet recorded on the bank side. They still have to record it. We see most of these are checks. Check 2, 5, 11, 13 and 14. Okay, so now since the bank have not recorded it yet on their side, we will have to do it on our equivalent of the bank statement, namely the bank Recon. Cash payments, we know it decrease bank, so we credit bank. So in our bank reconciliation statement, we will have to do the opposite. We need to do what the bank should have done, namely debit. But why did they not debit these yet? Remember, this is checks that we issued to various entities or individuals, and if those individuals did not go to the bank to present those checks, the bank would not be aware of it. They will only be aware when those individuals or entities present those checks. So for now we need to debit the bank reconciliation statement with all these outstanding checks, and you can see it's that whole bunch: 2, 5, 11, 13 and 14. So now the other question is, but now what about the circles that appear on the bank statement that is not in our books? Okay, so now if you look at the credit column first, because remember the credit column on our side we are looking at debit, so it corresponds to our cash receipts journal. We have, for example, interest of 240, so we receive interest on our current bank account. Now we won't be aware of that interest until we receive the bank statement. The bank statement is in fact our source document. So therefore we will still have to go and add this 240 to our journal. In this case, the cash receipts journal. So what we usually do is we first add up all our entries throughout the month and get the total, and then once we have that total, we will add any additional entries that we haven't added previously. So here is our cash receipts journal. We already have our totals. We totaled up before we received the bank statement. Now we receive the bank statement, and now we still have to record that 240 in the bank statement is our source document. Similarly, if we go to our bank statement, we can see there was at the end of a month rent. So what happened now here is the tenant did not come and pay us, but rather directly deposited or transferred the money into our bank account. So once again, we are only aware of it once we receive our bank statement. So therefore that 2,700 we will also have to go and record in our cash receipts journal. So when we look at the debits, they correspond, remember, to our credits, which comes from our cash payments journal. So we have things here like debit orders. Debit order is arrangement with a supplier or an entity to automatically deduct from our bank account every month a certain amount. So once again, we don't know, or that transaction we only are aware of explicitly that it went through our bank account once we receive the bank statement. So now for the cash payments journal, we will have to go and record that 75 Rand after we already totaled up before receiving the bank statement. So here we can see we have, amongst other things, that 75 Rand. So other than debit orders, one also get what you call stop orders. You can see here's a stop order with African Eagle. That is a arrangement that we have with our bank. So we can cancel that at any stage with our bank. But for now we have an arrangement that every month on a certain date that amount will go off our bank account. The difference between a stop order and a debit order is a debit order we cannot stop directly. We will first have to contact the entity or supplier that arrange with the bank for that amount to go off every month and go into their bank account. So there's a third party involved, where for a stop order it's only between us and the bank, so it's much easier for us to stop. Okay, but you can see that stop order we also would have had to record. So there it is, the 635 Rand rather. Then the other thing that we are only aware at the end of the month is things like bank charges. The bank will charge us for the services that they rendered, like here's a service fee, there's a cash handling fee. Now we add all these fees up and refer to them as bank charges. So we will still have to record our bank charges in our CPJ. Okay, so here we can see here's our 81 Rand for bank charges. So now we also know what to do with the circled amounts.